Guys, how we doing? I'm Ryan Mack. Welcome back to the Trading Guys. I was away last week. I was trekking the largest mountain slash jungle slash volcano trek on the island of Java. It's called Mount Argoporo. So I was away for like pretty much a week. I am in USD CAD buys on multiple accounts. I already gave that to the guys in the group. Where are we? Let's have a look at what we've got coming up. So this next 2 weeks, I am going to be here. Well, and sorry, not 2 weeks. It's now currently the 9th of August. I'm here until the 21st of August. All right. So if you are in our Discord group, I will be open to you. As much help as you need. Nobody ever bloody uses it. However, it's there if you need it. And I will be here until the 21st of August before I then go away and do another trekking expedition to Mount Rinjani on the island of Lombok, and then Gili Trawangan Island. Okay. However, if I do take any more trades at that point before I go, I will give the trade in the group as always. All right. My main focus right now is actually no longer teaching. What I'm going to do is I'm going to create a trading course, and I'm just going to sell it. Now, I was always a massive hater of trading courses because I just always thought, oh, this is a load of shit. You're making a course. And I was always massive that you need to do it live because people need the mentorship. What I noticed is people just don't want to put in the work in general. Not everyone. We've got a bunch of great fucking guys in the group, but there are also guys that pay the monthly subscription and don't turn up, and they just don't put in the work. And then for me to actually do the mentorship, I'm giving up so much of my time because let's say I'm going to do an hour with you, right? For example. Well, before I jump on that hour with you, I'm spending an hour to an hour and a half reviewing everything before I even come on to then, give you that education or teach you. I'm reviewing fundamentals. I'm reviewing data on sites like Prime Market Terminal. I'm reviewing technical analysis. And then you come on and like one person will jump on the live and you're just like, why the fuck did I just waste 2.5 hours of my life when I really don't need to do it? I don't need the extra lessons. I'm just trying to help people that want it. But I've realized in general, people just don't want it. Or what it is sometimes the timings are off because I'm in Asia and they may be in the UK, they may be in America, or they may be in Australia and so on. So the timings don't match. And I've tried it all, to be honest. I've tried mornings, afternoons, and evenings, and it's always the same. So I just kind of had a bit of a review, if you like, when I was on the mountains before, and I just thought, why the fuck am I doing this? So what I'm going to do is I'm just going to make a course. I'm going to punt it, get it to fuck. If people want to learn from it, they will absolutely learn from it because I'm going to be putting tons and tons of knowledge and information in the course. The quality of the course is not going to be, shit. It's going to be a fucking fantastic course. Many different parts. You're going to learn so much, and I'm going to make it very cost effective. Previously, when it was like 250 odd quid, that was because one, I was doing it live and it was mentorship, right? This time I'm probably going to punt it for about, I don't know, 57 quid or something, cheap, the whole course. And that's because it's just going to be videos that you're watching with no mentorship. Okay, so I'm just going to pump that out to the masses. Again, if you are in our group, I always say to the guys, look, I'm always here and available to help anyone who wants it. Just simply reach out to me and be like, Ryan, are you there today? Look, can you run through this? Can you run through that? And I will always give up my time to help you guys. But what I just found was I would review something for an hour and a half. I would then come on and do a live, and it would be the same one or two people the whole time, usually just one. The odd time you get two people, out of 200. So it's fucking pointless, guys. And I'm just too busy in my own life to be like wasting that amount of time, on fuck all when we don't really have to be doing it. So what I'm going to be doing is I'm still going to be smashing out the weekly reviews, blah blah blah. Still going to be doing this when I'm home. Last week I didn't because I wasn't home, but I will be doing it again this week, and I will be giving you the trades that I'm taking, and all that. Like for example, look, when I jump across here, let's just have a quick look. Signals, there we go. Look, there it is there. USD CAD. I will still always give you guys the trades that I'm taking, alright, so you can copy it. Let me just quickly do this for you. Hold on. Let me zoom in because I think it's better if I zoom in. And there we go. Hopefully you can now see that better on your screen. Alright, guys. So, as always, what we're going to do is we're going to get a notepad and pen. We're going to write currency streams up here. From left to right, you're going to write strong, right? Weak, then neutral. Okay? If you watch my videos each week, you will know the reason for that. If you're someone who is watching this brand new for the first time, that doesn't look logical. Strong, weak, and neutral. Logical would be strong, neutral, and weak, right? So the reason why we do this in this order is that you're going to write down strong economies, weak economies, neutral economies, and then you're going to ignore the neutral economies, and you're then going to pair up a strong economy with a weak economy. Now, when you do that, that gives you your reason why you're taking a trade, you know? If you look on GG and someone's drew a line and the candles went past the line, say, oh, why did you enter that? Oh, because the candle broke my stupid fucking line on the page. That's not a reason to take the trade. Now, let me give you full context here. It may be a reason to enter the trade, because we enter trades based on technical analysis, right? If it breaks this and goes to here and rejects this zone, then I'm going to enter the trade. Right, that's perfectly fine, but that's how you should use, you know, technical analysis. But what I'm saying is, technical analysis is not a reason why you're taking a trade. Right, a reason for taking a trade. Let's just again say it with GJ. You look on pound, PMI is up, services is up, manufacturing is up, employment is up, unemployment is down, credit card spending is up, average earnings is up. It's like, fucking hell, this is amazing, right? So the GBP would be strong at that point. You then look at Japanese yen, services have dropped, PMI has dropped, manufacturing has dropped, credit card spending has dropped, unemployment has shot up, employment has dropped. It's like, fucking hell, the Japanese yen is shit. So when you come across this data, this solid information, you now know that the pound is strong, the Japanese yen is dog shit. It's totally fucked. So what are you going to do? You're going to look to buy Japanese yen. GG, you're going to look at GG and you're going to look to buy it. Now, you might go across the chart and GG is already up here. You can't buy it when it's up here. You need to wait for the pullback. Don't be entering the sell on the pullback. You're just waiting for the pullback to come down, waiting to hit an area of rejection, which we teach the reasons for that. Areas of value, blah, blah, blah. And then you're going to enter the buy and let it go. And that's your reason to enter the trade, okay? Drawing a fucking stupid line on your page is not a reason to enter the trade. It may give you an indication of where you're going to enter the trade based on technical analysis, but it's not the reason to take it, all right? I'm not going to keep going over that. I've realised I fucking said that 100 times now. But it is something that you do have to keep covering, because you really need to make people aware of it, right? Or they'll just keep drawing fucking stupid lines on their page. Now, AUD... where are we? China and NZD. So what I do every week, as you know, if you're not new here, is I review one currency pair / economy by themselves, except from AUD, China, and NZD. Okay, the reason for that is because they're all very closely correlated. Okay, now I'm going to go back an extra week. I normally only go back 1 week, but because I was away last week and I missed last week, I'm going to go back 2 weeks, right, and do them all. So let's have a look here. CPI quarter on quarter has dropped. Bearish, bearish, sticky, sticky. Bearish. Flash manufacturing PMI has increased 51.6. So when it comes to manufacturing PMI and services PMI, anything above 50 is bullish. Anything below 50 is bearish, okay? It's dead simple. It's dead simple. If, for example, this here was 47.2 and this one here was 49.1, yes, it's increased, but it's not bullish, okay? Because it's below 50. It just means things are getting better, but it's still... it's still below 50. So that means it's still bearish, okay? Let's have a look. There we go, look. Business confidence 47.8, bearish, 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 bearish. Retail sales month on month is bullish. Building approvals bullish. Import prices bearish. Private sector. Manufacturing PMI is bearish. This has got worse. Look, it's 50.5 to 50.1. Alright, Jangan Berisik. This is 50.5 to 50.1. But it's still bullish, okay? Because it's above 50. Let's see what we've got here. PPI quarter on quarter 0.7. Cakes and manufacturing PMI. See, that's dropped again, 50.4 to 49.5, and that is now bearish. Okay, that's now come into the region of bearish. Now, when China is massively bearish, it has a knock-on effect on AUD and NZD, but predominantly AUD. Okay, and it's because when China increases the production, let's say they increase their manufacturing, right? Everything else speeds up and increases, so they need to get their supplies, either steel, iron, copper, nickel, zinc, gold, blah blah blah. They have to buy all that. Well, they don't have to, but they predominantly buy that from Australia, right? It's like 80-90% of it that business goes to Australia, I should say, because Australia, as you know, is a massive mining dependent country. Okay. So if China is dropping, it means they will be buying less from Australia, which means the AUD will drop as well, okay? If China is increasing, it means they will buy more from Australia, alright, which means AUD will increase. Sorry, every time I do these videos, I keep saying to the family, "Is it alright? Do you want to host a party while I'm here?" And they're like, no, it's okay, you can do your live. And then when I do my live, everybody starts screaming and laughing and smashing cups off each other and all that. What else have we got here? They changed the TV channel with a hammer. MI inflation gauge. Commodity prices. It's getting better, but I mean it's still bearish. Shit. Cakes and services 52.6 PMI. That's okay. That's a good number, and it's increased. GDT price index. Employment change was terrible. Unemployment rate has increased, so that's not good. So look, see when you see this here, right? And you're like, well, it's green, so it must be good. It's not good, right? If you look previously, it was previously 5.1%, okay? It's now 5.2%, which means unemployment has increased. When unemployment increases, it's bad, right? It's not a good thing. So why is it green? Well, it was forecast to come in at 5.3, and it's come in better than they anticipated, right? So that's why it's shown as green, because it's came in better than they thought. But if you look here at the actual and the previous, it's increased, okay? So you know that that's bearish, that's not good. So do not get fooled by the colour simply being green or the colour being red. Sometimes the colour is red, and likewise, it does not mean it's bearish, okay? It could be the same example I've just given, but just the other way around, okay? So it's important to look at the actual and the previous, and then look at what it actually is, okay? Because obviously, if employment has increased, then that's going to be a positive. But let's say it was at 0% here, right? And they anticipated it to go to 2.1%, right? But it came in at 1.2%. This is going to show it red. So you're going to think, well, that's bearish. It's not bearish, it's bullish, because the previous was at 0% and it's increased to 1.2%. But it's showing red because they previously forecast it to come in at 2.1, and it didn't reach what they'd forecast. It came in worse than forecasted, right? However, it would have still come in better than the previous numbers, which means it is actually growing. Okay, so really important that you don't get caught out with that, right? It's very simple stuff, but it is easy to also get caught out in it as well. Unemployment rate 5.2%. Okay, terrible. Labour cost index. Good. Good trades balance is good. Inflation expectations. Trade balance. China has dropped. US domestic trade balance. Okay. CPI year on year has dropped. Now look, see, there's another one that's green, but it's worse because previously it was 0.1%, now it's 0%. So why is it showing green? Because they thought it was going to come in at even worse at minus 0.1%, and it came in better than they thought. That's why it's green, okay? But if you look at the previous, it has actually dropped, which is not good. All right. PPI year on year has remained the same, but it's still worse. They thought it was going to get better, and it hasn't. It's remained the same. Okay. So for me, I'm going to be keeping Oz in neutral, and I'm going to be keeping NZD in neutral. Okay. Now, yes, you could argue that they're weak. But I'm just remember, I'm a swing trader, right? So I'm not focusing on what the numbers are for this week to see what's going to happen in the market this week. I'm focusing on the bigger picture. Over the last 3-4 months, are we constantly seeing it coming down, or are we constantly seeing it gradually rising? I want to see that big picture, right? Because I'm a swing trader. I'm a long-term position holder. If I enter a trade, I'm going to leave it for 10 weeks, 20 weeks, 30 weeks. I'm just going to let it go, right? But if you are a day trader, then you have to remember you are looking at the here and now, and you're not really thinking about the bigger picture. You're just thinking about what's going to happen in the market this week, okay? So context is extremely important. And if you are a scalp trader, then of course, knowing this is always going to help you, right? Having knowledge in something is not a bad thing. It's going to help you. But I wouldn't get too wrapped up in this. If you're a scalp trader, you would just really focus on price action if you're a scalp trader, okay? Yes, of course, knowing this is going to be beneficial, but it's really not essential. However, if you are a day trader, knowing this kind of stuff will definitely help you. It will help you get your bias correct, whether you're in longs, shorts, buys, sells, and if you are a swing trader or a position trader, this is essential for you because you really need to know this, all right? This week, what have we got coming up? Any good? We've got RBA monetary rates. So, Oz are looking to cut rates. Now, let's cover cutting rates, right here. Cash rate, they're potentially going to cut it from 3.85% to 3.60. Now, if you speak to most people that don't really understand the full context of it, and you say to them, what effect does it have on the market when a government cuts rates? Their instant reaction will be to you, if they cut rates, that's going to have a bearish effect on the currency. Well, not always, because look, they've already anticipated. Look, they've already forecast that they're going to cut rates. So you may find that when they cut rates and it actually comes in at 3.6%, then the market might even go bullish, or it might not even move at all. Why? Because they've already forecast it last month or 8 weeks ago, right? The big boys, they've already priced it in. You may hear many people use the term priced in. They've already priced it in ages ago. So, here's what would make a rate cut give a lot of bearish movement on a currency pair, okay? Let's say, right here it said previous 3.85%, okay? And right here, the forecast said 3.85%. So it's like, okay, there hasn't been a rate cut forecast, so they believe it's going to be the exact same, right? If it then gets to Tuesday and this cash rate then comes in and they anticipate it to come in at 3.85%, and it turns out that the Aussie government actually cut rates and it drops to 3.60, then you're going to get a massively bearish reaction on the markets, on the currency, right? Because it was unexpected. It's like, oh shit, unexpected. Then you're going to get a bearish reaction. But if this says here, previous 3.85, forecast 3.60, and it comes in at 3.60, you're probably not going to get much reaction from that. And if you do, you might even get a bullish reaction from it, okay? So it's important to understand that as well, guys. The whole context is important, right? You can't just look at the numbers and think, oh, it's dropped, that means the currency's going to drop. Absolutely not, okay? And likewise, if this is forecast to come in at 3.60 and they cut it massively and it comes in at 3.25, you will also get a huge bearish reaction because it was unexpected. It's like, oh shit, what's happened here? You'll get a massive unexpected reaction, okay? Which would be bearish. Wage price index, yeah, we want to see that. Unemployment change, yep, we want to see that. Employment rate, yep, we want to see that. Yeah, we want to see a lot of this used in here. So there's a lot of information next week that we want to see, okay? But to wrap this pair up, I have got both AUD and NZD down as neutral, okay? And of course, we don't trade the Chinese currency, so we don't need to mark that as neutral or anything because we don't trade it anyway. We just look at it because it is very beneficial when dealing with AUD and NZD. What have we got here? CAD rates the same. CAD's quite good. I mean the currency shit. Sorry, what I mean is the rate being at the interest rates being at 2.75% is quite good because all central banks really are just trying to get their interest rates down to 2%, and the Canadian dollar's already at 2.75, so it's in its kind of downtrend, right? Manufacturing PMI is 4.61. Yes, it is slightly increased, but I mean that's massively bearish because it's way, way, way below 50. Okay, so for me, the Canadian dollar is still shit. Trade balance, this is a deficit. So when you get a minus beside the trade balance, it means it's a deficit. If you do not get a minus there, it means it's a surplus, right? So if it's a deficit, all it means is a country is importing more than they are exporting, i.e. they're spending more money, they're buying more shit than they're selling, okay? If you're selling more stuff, it means you're making more money. If you're buying more stuff, it means you're spending more money, and that's how you end up in a deficit, which is not good, okay? IVPMI 55.8. That is actually really good. Very bullish, but you can't just go by one number, right? Employment change, that is really, really bad. Unemployment rate has remained sticky. So they've managed to keep a hold of unemployment. That hasn't grown, but the employment change has massively dropped. So what you might find is the next unemployment rate might change. Next week. We don't really have any big news next week for the Canadian dollar. And when it comes to oil is massively bearish. So when it comes to the Canadian dollar, we have to remember one of the things that makes it move is the price of oil. Okay, if oil is bearish, then it means the Canadian dollar is really weak. If oil is bullish, Canadian dollar has the potential to be really strong. Okay, so I'm keeping the Canadian dollar in weak as it was before. Moving on. CHF, we're just going to fly over this. CHF is just always, it's a lot of shit, right? It's pointless looking at it. It's always neutral for me. Always neutral, okay? Now, where CHF becomes strong or weak has really nothing to do with data that we're looking at here. It has nothing to do with it. It's to do with market sentiment. Are we in a risk-on sentiment or risk-off sentiment, okay? I'm not going to cover that in this video because I've covered it in 100 other videos, and I think there may even be a video specifically I should say, on risk-on, risk-off sentiment, okay? And if not, there will be in the course that I'm just about to create for you, alright? And I'm just going to sell it at a really, really cheap price, like 57 bucks or whatever, 57 quid. And there's going to be tons and tons of videos in there, okay? I'm not going to rip the arse out of it. And it's so cheap because there's no mentorship, right? I'm not going to, if you ask me questions, I'm going to be deadly honest. I love being, upfront with people. I ain't answering questions on the video because there's no mentorship there. If you want the mentorship, then that's a whole different ball game, all right? But if you're someone that's like, look, I'm happy to pay cheap, get all the courses, and I will just work my way through the videos, then this is going to be the course for you, all right? I don't ever mean what I say to sound cheeky. I'm not someone who fucking beats around the bush, right? I don't tiptoe around my words. I just say it as it is. Spanish flash GDP. So when it comes to the euro, of course we do have a look at Spain and Italy, but we just don't really care about them as much as we do France and Germany, okay? Spanish flash GDP 0.7. Okay, that's good. By good, I mean bullish, Bearish. Oh, excuse me. I need another coffee. Premium flash, bearish, bullish, bearish. Yeah, bullish. Bullish, bullish. So there is a lot of good. There's a lot of good data here. A lot of it's sticky in terms of manufacturing PMI and services. But one of the things that makes the Eurozone... why is it not showing here? I don't know. Oh, there we go. Sorry. Look, this is what makes the eurozone. Some people might be thinking, well, why if they're all bearish? I know there is a lot of bullish, but why if they're all bearish? Um, why is the eurozone kind of bullish just now? Well, look, their central bank rates are almost at 2%, which is fantastic. It means that the eurozone has done a great job on lowering inflation whilst not crashing the economy at the same time, right? They've done a really good job, which means it's really safe. If something is really safe, then it means it's really worth investing in, right? It's a safe haven. So that's why you're seeing a lot of bullish movement in the eurozone. Especially when the US is there's a lot of uncertainty in the US, right? Spanish unemployment. So that's actually really bullish. That's great because unemployment has massively. I know it's still minus, but it's it was previously minus 48. Bullish, 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 bearish, bullish, bullish. Oh, fantastic! They've massively jumped up since last week, right? Massively jumped up. Bullish. Don't be confused that it's red. Look, it's massively increased, so that's bullish. Bearish, bearish, bullish, bullish, bearish, bearish. Okay. This week we've got CPI coming up. Flash employment, CPI monthly, flash GDP. We've got a couple of bits of news. I'm going to keep the eurozone at strong for now, okay? Moving on, GBP. We've only got 3 more to do it. GDP shop index. Bullish, 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 bearish. Bullish, bearish, bearish, bullish. It's looking possible for rate cut. Oh, they did cut rates, so it was looking possible for rate cuts. Then they did cut rates by 25 base points. But look, you see exactly what I just mentioned previously on the other currency pair. If you look at GBP right now, it gave bullish moves. Let's just look at GBP. Ignore this. This is a real trade. Whenever I'm trying something out new, I just do it on the trading panel here, paper trading. So this is not a real trade, all right? But I have entered this same trade on my live accounts. Anywho, moving on. Look, you've got a massive, massive bullish momentum here, right? Now, why is that? Well, it's when there's rate cuts. Why is it bullish when there's rate cuts? Because look, they forecast it was going to drop, and it dropped to it already came in, right? So it was already anticipated. It was already priced in, and the goal is to get inflation down safely to 2%, and we're just bringing it down safely without crashing the economy. Okay, and everything else in the British economy is doing really well, so that's why it's bullish at the moment. What have we got? We've got average earnings, claimant count change, unemployment rate, construction output, goods, trade balance, manufacturing production month on month. Right, we've got a bit of news that we want to see next week. I previously had GBP in neutral. I am going to shift it across to strong. So we've had a couple of weeks of good thing, right? You could argue that it's going to stay at neutral. Let's just have a look here. Nah, it's looking decent. Yeah, it's looking okay. So I'm going to move out to strong. Moving on, Japanese yen. Let's go back. Bullish, bullish, same, bearish, bearish, same, bearish. So I mean, there's nothing good. There's nothing positive there. Monetary base year on year -3, bearish, bullish. Well, that's increased. That's bullish actually. Average cash earnings. So average cash earnings year on year has increased. It's come in less than forecast, but it's still increased. Why is that bullish? You know, ignore the fact that it's red because it's increased from 1.4 to 2.5, which is bullish. Okay. So basically, average cash earnings means that when that increases, it means people are earning more money at their jobs. Pardon me. If people are earning more money, what do you tend to do? Do you tend to increase the amount of money that you save? Absolutely not. You buy more shit. So if you make more money at your work, you're going to buy a new iPhone, you're going to buy a new iPad, you're going to go on holiday, you're going to take when you get a bit of spare money, you're going to take your girlfriend out for a meal at a restaurant twice a week instead of once a week or once a month, you know, and that kind of stuff. So you're basically going to be spending that money. If you're making more money, you're going to spend more money, which stimulates the economy, which is bullish for the economy, okay? So that's why average cash earnings is bullish. Household spending year on year is down, so that's not good. So it's not stimulating the economy. So this is what you call mixed data, okay? Bank lending year on year has increased. Now that's bullish again, because if banks are lending out more money, it means people are going to spend more money, which then stimulates the economy. That's a little trick actually to stimulate the economy. Economy watch sentiment bearish. So it's all mixed data. It's shit. The Japanese yen is fucked, right? This week coming up, we've got a couple of bits of news we want to see, but it's nothing great. So for me, Japanese yen remains in weak, and we now have one more to cover. Good trades balance minus. Okay, so that's bearish. Bullish. It's actually bullish because it's minus, but it has increased, so don't be a fool that it's red. Bearish, bullish, bearish. We don't care about that. Federal funds rates the same, they aren't cutting rates yet. Challenger job cuts, bullish, bearish, bullish, bearish, bullish, bullish, but bearish, but it came in better than expected, far better than expected. Unemployment rate is bearish because it's increased. Final services manufacturing bearish. Same. Bullish. So it's a lot of mixed data there. Not good. But overall, the US is still strong. It's because we're getting all these tariff and trade wars. You have to remember that as well. What we got here? Factory orders bearish. Oh, bullish. Sorry. Final says be my bullish. See, it changed. A week later, it literally changed. Unemployment bearish. Bullish. Don't care about that. Don't care. Okay. So we've got much better data this week, but it's still a bit wishy-washy. Next week we have got CPI coming up. So we want to see that. PPI, core retail sales. Yeah, so we've got a lot of news next week that we want to see. Okay, I am going to be keeping USD in neutral. Okay, so just to wrap this up, I've got strong Euro, GBP, weak CAD, Japanese yen, neutral, AUD, NZD, CHF, and USD. Okay, and that's pretty much it, guys. I'm going to wrap it up there. I'm not going to bother going through, all of these pairs for buys and sells. I can't be bothered. It's all a bit messy. All right, and it's very time consuming. I've just got tons of stuff to do today. So yeah, I will be here. If you're in the group, I'll be here from now until the 21st of August. If you want any help, as always, guys, I will help you all the way, right? I've just stopped actively doing the lives now because I just can't be arsed. I'm too busy, and like I said, nobody ever fucking jumps on them anyway. I'm always here for you if you need me. Whenever I take trades, I will be putting the trades in the group so you guys can copy me as well. All right, I'm Ryan Mack. This is Trading Guys. Thank you for watching. Much love. Have a great week.